Inflation is squeezing big retailers. That's our top story today on the Wall Report. I'm your host, Greta Wall. Target shares are plummeting about 25% today after sharply missing Q1 profit expectations. The retailer reported adjusted earnings of $2.19 per share on $25.17 billion in revenue. Now, that was short of analyst expectations on the bottom line, but sales did come in higher than expected. Comparable sales rose 3.3% year over year, which was better than expectations for a 0.8% increase. But profits plummeted 41% compared to a year ago. Target's CEO blamed that profit miss on unusually high cost. Those challenges included inventory that arrived too early or too late, higher employee compensation, more employees at distribution centers, and a change in merchandise sales among consumers. Target was also hit by higher freight costs as gas prices jumped, and those issues are expected to be worse in Q2. The company did reiterate its full-year forecast for revenue growth in the mid-single digits, but did not provide guidance on earnings. Now, this comes just a day after Walmart also sharply missed profit expectations. Walmart shares falling about 6% in today's session after tumbling more than 11% on Tuesday. And Lowe's shares are also down more than 4% today after missing fiscal Q1 sales expectations. The home improvement retailer reported earnings of $3.51 a share on $23.66 billion in revenue. Now, that was better than analyst expectations for earnings, but missed estimates on the revenue front. Lowe's CEO said sales in its outdoor seasonal categories were impacted by unseasonably cold temperatures in April. He said the company, though, has already seen improvement in May. Same-store sales were down 4% year over year last quarter, worse than expectations for a 2.5% drop. Lowe's did reiterate its full-year outlook for revenue to range between $97 billion and $99 billion in 2022. Now, those disappointing earnings, are weighing on the broader market, with the major indices all falling sharply in today's session. The Dow down nearly or more than 2.5%. The S&P 500 falling nearly 3%, and the NASDAQ tumbling more than 3% today. Now, in the economic news of the day today, U.S. home building slowed unexpectedly in April. The Census Bureau reporting housing starts fell 0.2% last month to a seasonally adjusted annualized rate of 1.72 million units. That missed economist expectations for starts to rise to an SAAR of 1.75 million units. Building permits also tumbled, but were in line with expectations, falling 3.2% to a seasonally adjusted annual rate of 1.82 million units. Now, this data is indicative of a new home market that is struggling amid surging material cost and falling buyer demand due to rising mortgage rates. And mortgage demand did fall sharply last week, even as rates did cool down just a bit. The Mortgage Bankers Association saying purchase applications fell 12% weekly and dropped 15% year over year. That was the first weekly drop since the third week in April. Refinance applications were down 10% weekly and 76% compared to a year ago. The average 30-year contract rate did actually decrease to 5.49% from 5.53%, but those rates are still sharply higher than even just a few months ago. Adjustable rate mortgages made up 10.5% of all mortgage applications last week, up from about 3% at the start of 2022. Now, oil prices have given up earlier gains and have turned negative in today's session. West Texas Intermediate crude futures down about 1.5% to just under $111 per barrel. Brent crude futures also falling 1.5% to about $110 per barrel. The energy market does remain focused on demand as China lifts COVID restrictions in Shanghai. The city has had 3 consecutive days of no new COVID cases outside of quarantine zones. That prompted authorities to allow 864 of the city's financial institutions to resume work today. Now, that is expected to boost demand as supply continues to lack globally. The Energy Information Administration also reporting today that U.S. crude inventories fell by 3.4 million barrels last week. Gasoline inventories declined by 4.8 million barrels. That sharply missed expectations for an increase in oil inventories and was a much larger drop in gasoline stocks than expected. And U.S. gas prices have hit a new record high today for the 9th day in a row. AAA says the national average for a gallon of regular gas rose above $4.56 today, up more than 4 cents overnight. Diesel also jumped to a fresh record above $5.57 a gallon. Analysts say U.S. households are now spending $5,000 a year on gas. That's up sharply from just $2,800 a year ago. And in March, the annual rate of spending on gas was at just $3,800. Now, meantime, a new survey shows U.S. CEOs are betting on a recession. The Conference Board's measure of CEO confidence tumbled 15 points in the second quarter to 42. Now, any reading below 50 signals a negative outlook about the economy. 57% of respondents said they believe the Fed's actions to tackle inflation will cause a very short, mild recession in the U.S. Just 14% of CEOs said business conditions improved this quarter, while 61% said they actually got worse, and only 19% see any improvement ahead, while 60% expect things to get even worse. Although 63% of CEOs did say they plan to hire in the next quarter, 80% said they were having trouble finding qualified workers. So what are you expecting? Do you agree with these CEOs that the Fed's actions will cause a recession? And if so, how severe do you think it'll be? Let me know in the comments, and I'll see you back here for the Wall Report at noon tomorrow. Give this video a like before you go.